Good afternoon. Welcome to daily currency update from the currency desk. Yesterday we had a sharp increase in the value of Indian rupee against the US dollar. This was mainly because the day before yesterday we had slightly eased out WPI figures. So this easing of inflation has slightly increased the expectations of another fresh round of RBI rate cut. But yes, overall the rupee does look a bit shaky, and in the near term we can expect the rupee to depreciate. But yes, until there are no major triggers, we can expect the rupee to trade in the range of 55.30 to 54.50. Currently, the increasing fiscal deficit and the trade deficit forecast are also putting in some pressure on the Indian rupee. This, coupled with the soaring inflation, and again we have the weaker IIP data coming in. So all in all, there looks to be some high pressure on the Indian rupee. So its value is going to depreciate in the near term. Currently we recommend that initiate a fresh buy only above 55.30 levels, because we could see a short term rebound at current levels. But yes, if it crosses 55.30, we could keep a target of around 56 levels by the end of this month. In terms of Euro USD, the Euro USD value has remained kind of sideways. Yesterday, for the first time, we had 3 consecutive quarters negative growth of GDP for the Eurozone. So collectively the Eurozone is in a recession, technically speaking. But yes, this was clearly contradicted by the fact that we had the Germany and the France GDP, which came in much better than expectations. So all in all, the reaction for Euro was mixed. So we did not see any major move in the Euro, not only against the Indian rupee but also against the US dollar. At current levels, what remains to be seen is the inflation data for the Eurozone. Currently it seems to be easing out, but yes, it is still above the inflation forecast or the targeted inflation by the ECB. So until the time the inflation comes around target levels, we will not see any easing, any rate cut from the ECB. At current levels, we see a bullish trend forming in the Euro against the Indian rupee, as the Indian rupee is falling at a greater pace as compared to the Euro. But yes, we would recommend a safer buy above 70.24 levels only. In terms of pound, we are going to see a continuous string of fragile or weak data from the UK front, as it is being forecasted by the Bank of England. The first of its lot was the UK retail sales data, which came in lower than expected. Currently, UK is struggling to maintain its AAA ratings, but yes, till the end of this year, we can see UK maintaining its AAA ratings. So, all in all, we can expect the pound to perform better than Euro. Though the pound will fall against the US dollar in value, we can expect it to remain higher against the Euro. At current levels, the inflation forecast is also being revised upwards. So this is also threatening for the UK economy. At current levels, we recommend a sell with a stop loss of 87.31 in the spot. In terms of Japanese yen, we had the Japanese Prime Minister yesterday announcing a dissolution of the parliament. So based on this dissolution, we would have the re-elections being triggered again, and in the re-elections being triggered, we expect the opposition party to win. The opposition party leaders have been making strong statements regarding increase in the size of quantitative easing and giving an unlimited quantitative easing to the banks. So all in all, this has had a negative impact on the Japanese yen. So we have seen the Japanese yen fall in value. In the near term, we can expect the Japanese yen to fall against the US dollar up to 83 levels, that is around 3-4% of depreciation. Yesterday against the Indian rupee, the Japanese yen fell by around 2.5% and almost 1.5 rupee. So currently we maintain our sell position in Japanese yen with a target of 66.83. Thank you.